that realized that he couldn't start the IT journey very early. So he was the one I used to inaugurate my IT training and my IT company at that time. And then for the extra 10 years he lived, he utilized the IT industry very well. So I understand, I learned from that man. At the same time, I understand so many things in life. Okay. Now, what is actually Forex? Any company that will come and steal you or take your money away uses words you don't actually take time to understand. And one of them is Forex. Second one is crypto. The third one is what? E-commerce. Then the upcoming ones, which I will let you know before they happen, is when the smart web industry is open. We are currently in the web 3. From the web 3, we are going to smart web. From the smart web, we go to web 5 and 7 and above, where the whole internet will be what? Revolving. And at that particular time, those of you who will not take Forex trading serious, you realize that there is no job for you after all. Because you might be a midwife, but then AI, robots, will do better than you as a midwife. So in a nutshell, along the line, if a hospital needs to employ like 100 midwives, they might end up employing like 5 just for supervising purposes. Because those robots, those humanoid android robots, what they do is that they actually have the lens, the ability to what? See the tummy, see the baby in the stomach, not on a black and white paper, but colored. So they're able to know the condition of the baby and the mother and provide accurate information. Now, if we are actually looking for sacking people from jobs, midwifery is the last level we could say is crucial. So if I'm using that industry for an example to you, it means that we've already diagnosed and checked all the industries. For instance, those of you who planning thinking that, okay, when I go into movie industry, I'll become celebrity and make a lot of money. I want to assure you that it's now becoming useless very soon because with Mid Journey, which is a software I taught some of my students, you can produce any human being to fit into any story you want to write and use those human beings to act your movie. So virtual reality becomes real by producing people, not taking Jackie Appiah to clone herself and act that one. And that is where we are going, right? So at the end of the day, the only industry which is rise or fall, market is buying or selling, there will be residue that is left is money transaction, and that is the foreign exchange market. It is the only market that when it gets to the worst case scenario, people will use algorithm and cryptographic ability to generate tradable assets for us to trade, which is already in existence 10 years ago. So I want you to take this as a Mother's Day gift for yourself and then reproject into the future and take this thing called Forex very serious. Now, on the basis, this is a skill that once you get it from this company, even if the company get to their target, okay, and genuinely they said, we are not in business again, this will keep you far. Some of you here might end up becoming a brokerage firm yourself, where you will provide leverage to people after you get enough skill. Some of you will become payment agents. Some of you become affiliates. Like a whole lot of opportunities around it. So let's take it very serious. Let's not wait AC Clement to remind us that it's time before we jump and then come in, right? So I hope that goes well with all of us. And good evening once again. So let's just start with today's work. We are coming to break down support and resistance into detail. Now, if you are not watching the videos, I will urge you to actually try and watch the horn bouncing strategy very well. Now, it means that as you are with Titan, you are even getting a free strategy that will make money for you. There are some strategies, if you want to buy them in the Forex market, $5,000 is too small. I mean, it's too small. Some people pay on monthly basis, right? So please, before I practically teach the horn bouncing strategy, the short horn and the long horn, I will want you to watch the video as many times you can. Like, watch it, watch it, watch it, observe. Take the MetaTrader platform, okay? Just scan through and see what you can identify and see if it will look like what you've seen in the video. By the time you learn through and we get there, to make everything very simple for you. Now, there are some observations I make when it comes to learning. In most of times, what if mechanisms affect our decision making when it comes to learning? We jump over the meter before before time. Okay, we jump over the wall before the time. So as we are learning, if you want to do any research, yes, it's good to do the research ahead, but sometimes review what you learn so you can be able to what? Understand, because the skill is connecting, right? Whatever we are teaching is linking one point to another, right? So let's not jump over a certain topic, then try to uh, project our fears. That what if mechanism is one of the greatest things that affect progress when it comes to acquiring these skills. Okay, so let me go to MetaTrader platform so that I will use it, since that is mostly what we will use. So we'll try to go with the web version, the app version on the PC, and then right. So let me take one of these assets. Yeah, I'll use Euro US dollar per our demonstration. All right, so basically, when something is falling, there are two things involved. Either a free fall. Now, if we go back to chemistry, we know gravitational force that acts upon it. So what if it is going back? Well, let's assume we are using aerodynamics, right? So let's say a plane fly into the air and then it get to a certain point. The plane got to a certain point and remain at that point, and then in a kinetic or in a motion form. Now, if the plane wants to land, it will definitely come to the ground. So where the plane is coming from is a resistance. And where the plane has landed is a support. Let's also use a ball. You throw a ball in the air, and the ball gets to a certain point in the air. Based on the pressure or the force you used to push it into the air. So it gets to that level and then it bounces back. Definitely, because of gravity, it will hit the floor. Now, if you did not hold the ball in between the floor and wherever it is coming from the top, it will push up. But it can only push up based on the gravitational force that acted on it before it hit the ground, or the speed. That speed will determine how the next bounce will be. So if that bounce couldn't, that speed, that force is not enough, or the speed is not enough to oppose the force back to this level, we will then consider this area as a resisting point because it prevented the ball from going up. So we can say this is a ceiling. We can say this is a ceiling. And then this is a floor. Now, if the ball breaks the ceiling, probably because maybe the force is higher, so it broke through the ceiling and get bounced from the ceiling towards the roof. That's another point. Now, from the roof, it can decide to hold on the ceiling or equally break the ceiling back to the floor. This is the logic we are coming to break down for supports and resistance. Now, when we are using the law of, or when we are using the examples of the floor and the ceiling, it becomes static. I don't want us to see it from that static point. I want us to see it from the dynamic point because many expert traders, what makes them do wrong thing when it comes to trading is that they assume that this is a support area. So compulsorily, market must buy from here because they said it's a good idea to buy on the support and it's a good idea to sell on the resistance. Yes, that logic is clear and that logic is correct. For example, there is a resistance here and then has given enough evidence for price to reverse. Hence, market is selling. Now, there was a reason, a good reason here for this market to also buy, hence making it a support. But this wasn't a support from the beginning. This wasn't a support from the beginning. When we extend the line towards this area, we've seen that price came down here, went back, come down here, went back, come to this area. So at this particular area, we will consider this point as a support, which we can extend. We can extend. Now, this area being a support, then something happened. And then price came back to this area. This line is no more a support. It turns to now a resistance because it prevented price from breaking through the first yellow line to the second one. And then price now went down to this area. So as price came back, a push up and now break this support, which was a resistance. So we now see this area as a resistance. And then it now break this support again, which was also a resistance, and convert it back to a support again, right? So at that particular point, it came here again and pulled down. It is not about the line or support or resistance. It is about what happened at that particular area and what reaction it gives market. So key point you should put down is what happened at that particular point, and then the reaction of price. After the reaction of price, we are also going to look at psychology. After psychology, we look at price action, and then how the price action created the nature of the market. How the price action creates the nature of the market. Now, one point here. I'm dragging it to the corner here. If you did not write, please try to write it down before we clean it. Now, when market is moving, market doesn't move like a rocket. Neither does it move like a plane. Yet, it does not move like a vehicle. It moves in a pattern form. It moves in a pattern form. As it is moving, it catch something. Just like the flow of blood in the heart. When they try to monitor the performance of your heart, if it is straight like this, then everybody will be sad. Some people will be praying last prayer for you and be asking forgiveness of your sin. And when they start doing like this, you see the nurses, the health practitioners will be a little bit excited. Then they see it like this and they are happy. This is how the forex market moves. This is how the forex market moves, right? But when the forex market is in a straight line like this heart line, we will definitely be seeing it doing something like this, which we have a name for. We are coming to look at all those names, and we'll look at what happened after you are able to tell that name, and so on and so forth. Then there are two things involved. It comes below or it goes above and start going upward or coming downward, which we know when it is going upward, we consider as an uptrend. When it's going downward, we consider it as a downtrend. When it's going this way, we call it a sideways movement. A sideways. So those are few things we are going to look up to technically at the same time. All right. So let's break it down. Now, reaction of price. An area where we expect market to change direction. So a support or resistance, or support and resistance, are potential areas where we expect market to bounce. We expect market to bounce or reverse or turn. So at a support area, our expectation is market to what? Be rejected. Price should be rejected. A resistance, the same. But I wanted to break it down a little for you, just to take you a little bit advanced. A support or a resistance or a support and resistance are areas where you expect reaction. Now, what reactions? It could be a bounce, it could be reverse, it could be turn, and it could be break. It could be any of them. Now, why could it be any of them? Your support that you are expecting that market to change direction from could be broken. Price could break it and then turn direction as well. At the same time, price could break it and reconfirm and continue the direction. That is why you put it in your mind that a reaction point is a support and resistance, and support or resistance. So you just not draw the line that this is a support. I'm expecting a buy. This is a resistance. I'm expecting a sell. You don't do that. You will be disappointed. Now, when you're actually doing some researches, you will hear people saying that support and resistance don't work. It is not that it does not work. It is because they don't understand the logic around it. Let's now do some more practicals. For example, this market has already happened. This market has already happened. Okay. So let's do some few stuffs here. Now, when we look at this point here, we can draw it here. We can also look at this point, this area, or consider this point here. Great. Now, all those who actually draw support and resistance and expect compulsory sell, compulsory sell on support and or resistance, they will be disappointed here. And they will be disappointed here. Because to them, they would have put a sell order, thinking that market will sell. Those who are looking at these points, they would also put a sell order. Some people even go to the extent of putting a pending order. And what happens is that when they put the pending order, their stop losses will be above, but they're expecting market to come down. So when market didn't come down and they don't want to lose more than they expected, or they accept how much they want to lose, what they do is that they put a stop loss, which is actually a good thing. I always recommend that. But you can look at the point that where they were thinking the market will reverse from, they did not respected it. So they can tell that, oh, support failed, or resistance failed, or support and resistance did not work. But the problem is that they only draw the line. There is no psychological reason behind the line. Now, when you draw a support and resistance, or support or resistance, and you are in the market, as price is approaching the support and resistance, check the momentum. Check Well, okay. Hello. Am I audible, please? AC, can you hear me?